This is the video for Friday, January the 15th. We're going to add one more stock to our review, something that Zach said in the comments, and we'll take a look at FIS, Fidelity National Information Services, right at the end. But today the McClellan oscillator continues to chop on either side of the neutral line, today ending down about 27 points. But here's another way to look at it. We've looked at these trend lines before in the McClellan oscillator that have served as support. And here we have one possibly again where the McClellan could drop a little bit more and hit this trend line. So let's keep an eye on that tomorrow. But we've got 3 days until the inauguration. And a lot of stuff is starting to leak about what's going to happen in the first 3 days, in the first 100 days. So I expect the market to be a little quiet in the next 3 days, but earnings continue. Remember, Friday was bank earnings for 5 different banks, and it was mixed results, with JP Morgan having great results and Citibank not so great results. So now let's look at the charts. And here's the S&P. Now I pointed out on Twitter the other day that, maybe Friday was just closing a gap, but we have closed the gap, and let's see where we go now. The Chiku span isn't telling us anything. The cloud, both of them are up in the open. We're saying that the Chiku span probably has support for price somewhere in here all of next week. So we're going to take a look at that, and let's just give ourselves a little bit of a reminder why we drew that green line there. So the S&P, I think, could continue in this narrow range for the rest of the 3 days, maybe 5 days. Apple was down. Now I've added the 20-day simple moving average in here, and you can see that Apple has lost not only the 8 but the 20-day, and could very well be coming down to this 78.6, and the 50 SMA are at exactly the same spot right now, 124.35. But remember, earnings are not coming up this week, but the middle of next week on the 27th, and I would just assume that they would be spectacular earnings. So I am still short 3 February 130 puts. Zoom Info, still staying above the trend line, so I'm still in there with 300 shares, and I was able to roll my short 45s into next week and pick up a fair bit amount of premium. But I'm not going hog wild by being uncovered with ZI. I still have my short 45s. Now we finished just under 45, so I could have taken all of that profit, but I just rolled it into next week and continue to add to the premium, lowering my cost, continuing to bring income in through selling covered calls, and that's what I do. Square is a choppy stock, to say the least, and has pulled back. Took a look at tip ranks, and the analysts are still saying that it's a stock worth buying or worth holding, and so am I. Holding but not buying. Let's look at CVS. Well, let's look at our new, because I put CVS into the new category. CVS now has come back. It's had this breakout over the green line that we said would be our opportunity on its way to the first butterfly target of $80. Now it's come back to test that. So if you wanted to buy CVS, buying a 75 call and selling an 80 call might not be a bad idea. Take a look at when its earnings date is and try to steer clear of that unless you've got a predisposition to be bullish or bearish on their earnings, but it's always a crapshoot. But if you buy a spread like that, then your maximum loss is going to be what you paid for that vertical call spread. So take a look at that. That could be interesting. RKT continues to not tell us anything informative. SONO had a bit of a pullback but finished at the top of the day, so that's encouraging. It should be going higher. Boeing has fallen below the cloud. The Chiku span now is heading lower. Not a stock that I would buy. Not a stock that I would short. DDD, that's not really good. Look at its attempt to move, and then it's piled on and finishes at the low of the day, but the volume was pretty insignificant. VERU that we're looking at on this bull flag that was pointed out by Trader Stewie, he says that he's patient with it, but it's not giving him the magic pop that he expected from this kind of a formation. So we need to just, if you're into that, just keep an eye out open for it, but I would still have my alert at the top of the flag. But we broke out once and dropped back, so I want to see 2 successive days of breaking out before I jumped into that. And CVS, we already talked about. FIS. Let's look at FIS now as you would any other news stock, and let's start with the FinViz analysis. So FinViz automatically identifies a couple of trend lines, one that it's fallen through, another one that it could be heading for. But what else do we know about them? Well, we know that insiders don't own a lot of this stock, but they have been selling. Institutions own almost all of it. So if you're buying, it's likely that institutions are selling, but they're not selling right now. They're only 0.31% selling. But it's down 6% for the week, 10% for the quarter. The year is down 11%, and it's down 8.3% from the prior year. So if you're looking to buy this stock and you're looking to buy it at a reasonable price, this could be it. It's not got a tremendous amount of short, and the target is 164. Now, if we go into FinViz, we go into tip ranks, let's see what the analysts are saying about tip ranks. And let's look at FIS, Fidelity National, and analysts are saying 167. That's in line with what you see on FinViz, of course. The top analyst, James Friedman, 1 month ago, says that we still have a 170 target. Mihalos, another 5-star analyst, a month ago said that his target was 180. So, Zach might be onto something. He has a habit of picking some pretty good stocks. Let's look at the Fibonacci. And the Fibonacci, let's just highlight that. So there's different ways you can pick this Fibonacci, right? You can take this one down here, but that's the only time it went that low, whereas you had 1, 2, 3 days in here where it hung out. So I'd be more inclined to take that one, or maybe even this one, which is sort of the average of those 3, and say that's going to be my Fibonacci line. And let's see just how good that is. So let's move those over to the right and bring it in here. And you can see how well those fibs fit. So we almost had a double top, but we had sellers selling just ahead of the top. Let's look at the volume for that selling right here. That selling took place with not such spectacular volume. So it wasn't institutionally driven. And then it was down to 38.2, and you had tremendous buying at 38.2. That was institutional buying that drove it back up for a rejection at this second minor Fibonacci, 88.7%, and now we're down to 50%, and we finished the day there. So it could be a stock worth taking a look at. What's the buy point? Well, this is the buy point. This volume was substantially higher than the moving average after 2 days of convinced selling. So if you like this stock, buy 100 shares now. Watch it as it moves up and continue to add. Sell some at 61.8%. Wait for the break and add more. But it looks like a good stock, and we'll keep an eye on that one. So I hope you have a good rest of the weekend. I don't normally finish off like this. I usually just cut it dead. But hope you have a good weekend, and see you tomorrow night.